All righty. So September 24th, we're almost at the end of the year. Um, hopefully you guys had a good trading week as discussed. If not, hopefully you know what went wrong and you're able to correct it, going forward. Um, we had a couple of things that happened this week that were kind of one-offs. The first thing we had was the yen intervention. If you guys noticed, all of the yen pairs took a huge dump, and that was due to the Bank of Japan propping up their currency. They're bought yen. They manipulated the price basically. The Bank of Japan, you know, is just kind of trying to do what they can to tread water, since they're not raising interest rates. Of course, we know the Fed did raise interest rates another 75 basis point, and that kind of put the world in a pickle. Kind of jacked up some things over there in England. The Bank of England um, raised their interest rates 50 basis points, and then we had a one-off over there as well. With the bank raising their interest rate, you had the policymakers giving away free money, which is unheard of. It's a double whammy. It's the way you make inflation stay longer. We kind of do it here too, but I think with the rise of the dollar, it's putting pressure on the rest of these uh, policymakers and countries um, to raise their interest rates or do something different. Like it's causing a major problem. So, we're kind of getting to the level that we haven't been at, since like the 80s. And I was doing some reading, and in the 80s, they did a mass intervention. It involved, I think, 4 or 5 different countries. Uh, because the dollar got so high, um, the U.S. in conjunction with uh, Germany, England, and I think Japan, they all bought euros, and to push the price of the dollar down. I think we might end up seeing that happen again here. I don't know how fast, but we're approaching that level. And if you listen to the news, you start hearing um, words like intervention and the price of the dollar is we're exporting inflation to other countries and that good stuff. All of that is true, um, but I think we have to look out for our citizens, before we look out for the world. Um, but I think we should all be cognizant of the trading environment that we're in, since we're not in a zero inflation trading environment. Make sure that when you're trading, you always keep a stop loss on your trades. Make sure that you keep a hedge on your trades, whatever you use for protection, because you just never know when somebody is going to intervene, in this type of environment. Okay. Um, just understand that we're in that we're in an uncharted territory when it comes to that. None of us have ever traded in an environment like this. So, don't be the person that gets made an example of because you thought it was cool to trade without a stop loss, because you're going to blow your account. So just understand that you've been warned, and to keep your stop loss in in an area that you're comfortable with, you know, a percentage that you're comfortable with losing if it goes the opposite direction. You guys have any questions over that? Y'all understand what I'm saying? Has anybody heard of intervention?
No, and I must admit, I don't really understand.
Okay, so y'all need to go and Google it. Go look at YouTube. So what an intervention is countries or a country that wants to prevent the destruction of their currency. Everybody knows how far the yen has fallen. You know, like the value lost on the yen is like astronomical. So, you know, a country is going to be affected because there's a trade balance. You know, they got to pay for the goods and services that they get from another country. Or, you know, in some cases, if the US is exporting goods to a country, they have to be able to pay for those goods. So if the value of the dollar goes way up against your currency, it might cost 2 or 3 times the amount it would normally cost for those goods. Therefore, you can't afford the same amount of goods that you export from the United States. So that's why a country needs to bolster its currency against the US dollar. If not, then every asset that they trade in dollars is going to be too high. And I mean, that's not just the Japanese yen, it's every other country. And you have to understand that the global reserve currency is the US dollar. So everything that's traded in dollars, whether it's oil, sugar, wheat, whatever, you know, it's all going to be more expensive. So with the dollar surging the way it is, it's putting everybody else in a bad situation when it comes to affordability of goods that they buy from the US. It also puts the US in a bad situation because now people are going to have to say, we can't afford to buy whatever goods you guys are producing. If they can't afford to buy the goods, it's going to shrink the GDP, which is, you know, the way we make money as a nation. That's going to reflect in the GDP numbers, which also means that you're going to be in a recession. That's what the Fed is trying to do. That's what they're saying that they're going to do. They're going to put us into a recession. So, you know, understanding all of the things, all of the dynamics that are going into the market, you have to protect yourself while you're trading. That means you can't be out here on Clown City trading without stop losses. You're going to blow your account. Just understand that there are more dynamics that affect the Forex market now than it was a year ago, you know, or even, you know, coming into the year. You know, we've been on this call forever, you know, right? Coming into the year, we were going to be raising interest rates. You know, the Bank of England was actually, they already raised their interest rates. You know, we made a lot of money in December trading the British pound. Then, you know, coming into January, we expected the US to raise their interest rates. And now we've gotten them raising the interest rates and everybody's crying. But, you know, the important thing is to look past the cries and understand the dynamics that are in play in the market, right? By raising the interest rates, it strengthens the dollar. By strengthening the dollar, you're affecting the rest of these countries. The dollar is the reserve currency. So just by virtue of the Japanese financial ministry intervening here this week, you know, it just brings an entirely different dynamic to the Forex market. If you were paying attention, the yen pairs dropped like 700 pips, man, like Thursday night. So you know, that's a significant move. I mean, it's something that should not have happened. You know, it wouldn't have ordinarily happened had it not been intervention. So if you understand that that stuff is, it can happen, you know, then you need to guard against that stuff happening. I mean, it worked great, you know, for us who were trading, who were selling the yen, like Chef JPY or EJ or GJ. I know a few people were in those moves. But it could have went the other way too. And if you were trading without a stop loss, you know, you would have been tore out the frame. So I'm just trying to help you protect yourself by understanding the environment that we're trading in now. Okay. Does that help you, Elfie?
Yes, thank you.
All right. I think I need to clear up some stuff about oil. You know, I for the swing traders, I think we talked about oil and the hurricane that hit Puerto Rico, and maybe there was a hurricane coming to the Gulf that would drive the price of oil up, and then oil, the price continued to drop. So there are two things affecting oil. Anytime you talk about recession, the price is going to go down. Okay, that's absolutely true. But if that hurricane does hit the Gulf, you're going to expect some upward pressure on oil. If you're going to trade oil, you have to pay attention to those two things. Okay, if the hurricane misses the Gulf, then the price of oil should continue to drop because we heading for a recession. There's no way around that. The Fed has already told you, and it told everybody who will listen, that we're going to be in a recession. So that's going to happen. You're trading oil. Hopefully you're trading it down, and you're expecting it to go down, because if you're expecting the oil to go up, it's going to be hit or miss, and maybe you're trading a retracement to the upside. But understand that the price of oil is going to drop when we talk recession. China's economy is already in a recession. That's the number 2 economy. The U.S. economy is number 1. And once we hit recession, you know, the world will be in a recession. And some countries will more than likely hit a depression. But just understand that the goal of our financial policymakers is to drive the country into a recession. So if you understand that as a trader, your moves that you're looking for is for those indices to keep dropping. They're telling you that they're going to trade us into a recession, and the dollar is going to keep getting stronger to a certain extent. Now you're going to start seeing different countries intervene, and maybe even the US will intervene to slow down the strength of the dollar. Okay, so make sure that if you're trading, you understand the threat to your monies. And now that we're trading into a recession, we should start seeing risk-on trades. You know, the yen should start getting stronger. The indices should keep getting weaker. You know, those are your safer bets. Trade oil down. Okay. If you guys have any questions on that, hit me up one-on-one or whatever, and I'll be happy to deep dive, into this type of stuff. But you can also go to YouTube and you can Google, risk on trades versus risk off trades, or you can type it in YouTube. You can also Google it, educate yourself a little bit in the subject matter. There are plenty of opportunities that we'll have to make this money. The Dow Jones, dropped out the sky on Friday, and some of you didn't take the trades, and some of you did take the trades. Y'all know I don't trade the Dow Jones every day, but when it gives away 700 points, you can best believe I'll have my bag open for those 700 points. You have to start looking for trades in the areas that you understand that are going to have big movements. anytime the Fed raises interest rates, we expect the indices to sell. Now, sometimes they buy, and we can't help that, but hopefully we're not the fools buying it up, you know. I mean, if it buys up, that's cool, but the expectation is for the price to fall. I would not be surprised to see the Dow Jones end up back at 17K. And this won't happen overnight, but the Fed is expected, you know, to raise interest rates to like 5%, you know, I guess by sometime next year, and hold it there. So if that's the case, you know, I mean, we have plenty of downside to go on these on the indices, because putting the country into a recession is going to hurt profits and earnings, and it's just going to drive the value of these companies down. So I'm looking for trades to the downside on the indices, and hopefully you guys will too. If I'm trading anything to the upside, it'll be the dollar. The yen will be going to the downside, and of course we'll look for other opportunities with these you know, currency versus currency. But the chef should get a little bit stronger. The yen should get stronger, and the dollar will get stronger. You guys have any questions? All right, all right. So
I do. I have a question. I think I heard you say that you want to trade the JPY to the upside, but how do you do that? You sell the
you sell.
okay.
So you sell those currencies.
You sell the pairs that are paired with the JPY pair.
That's 100% correct.
Okay. Thank you.
All right. So I think there's a couple of new people on the call. What I've been doing here lately is focusing on the mental aspect of trading. So if you're a new person, you need to hit me up on an individual basis, and we can get together on an individual basis. And if you need help, you know, with like technical analysis or something like that. But I think for the most part, and for the good of the group, we've all been, you know, trading or you know, at least leaning into this trading thing for a couple of years. And the problems that we face are in between our ears. You know, we can't get out of our own way. We've talked about coming up with a trading plan. We talked about journaling. Hopefully everybody has started that process. And now we're talking about having the mental capacity and the mental mindset to sustain a level of success in trading. You know, I can't overstate or overemphasize the importance of mindset when it comes to trading, and you know, the importance of being a disciplined individual. You know, me and my brother, you know, had a little debate, you know, this week, you know, about something as simple as how your diet can affect your trading. And you know, I guess, you know, individually, you know, you kind of have to weigh out, you know, if dieting will help your trading. But here's what I do know is that implementing a strict regimen, you know, whether it's dieting, whether it's what you're doing with your time, whether it's watching TV or how much time you're dedicating to your craft, you know, that is going to be a direct impact. That's going to have a direct impact on your trading. You know, there's a reason why some people come into trading and they dedicate time to learning, you know, different strategies or different concepts, and they know and they learn those concepts and strategies, and they're able to implement those concepts and strategies in a relatively short amount of time. And then some people, it takes them 5 or 7 years to do. You know, the only difference between those individuals probably is the amount of time that they dedicated to learning that craft and then implementing that craft. So just understand that this is going to require you to first learn the concept and then do what it takes to implement that process. The process to I guess execute that concept. All right, I have a video today. It's another mindset video, but it's over a guy who's traded over like a 30-year time period. All right, and he'll talk about some of his successes and the poison that's out there for if you learn to trade in a bull market versus a bear market. There's a difference. We're in a bear market now, so we're not going to make money if we don't know how to trade. All right. In a bull market, you can make money, you just buy it, right? But in a bear market, you're going to have to know how to trade in order to pull money out of this market. And it's not difficult. Nothing goes straight up or straight down. We can all read order blocks. We all know when a 4-hour order block says sell, we're going to sell. We know when it says buy, we're going to buy, all that good stuff. But do you have the discipline that will allow you to pull the trigger when you know it's time to pull the trigger? And that's what we're going to talk about here today, in this video. It's about a 40-minute video. It's going to take us a little bit over the time frame, but we needed to talk about those moves that happened, in the intervention that happened this week in the market.
You have to be dedicated to it. You're not going to do this on a whim and just make money. In a bull market, sure, but it's not always a bull market.
Welcome back, everyone. Today we're sitting down with Jason Shapiro, one of the market wizards from Jack Schwager's most recent book. Someone who's really had a big experience in trading, also like a big track record, was verified from Jack Schwager and everything around. So Jason, how's it going today? Welcome to the channel.
It's all good. Thank you.
Awesome. Good to have you here and good to talk. I believe one of the first market wizards I talked to. I love the book. I'm sure you love the books as well. I read a new bio before you read all these books from Jack Schwager. So we'll talk about your story, how you went to trading, some tips for people on how they can kind of strive, become better traders. So maybe give us a bit of background about yourself and kind of what you do these days.
I'm 55. I started trading when I was about 22. I lived in Hong Kong, started out there, and just kind of kept doing it and kept learning lessons and kept losing money and kept trying to get better and, still trying to get better. Always trying to improve. Over time, I sort of developed a process and a discipline for how I trade. And over time, I learned that those were really the most important things about trading, is process and discipline. And I try very hard to stick to both of those things over time. And I've worked at a number of places, different prop shops, hedge funds, had my own hedge fund. And that's what I currently do now. I manage money for institutional clients. I run a CTA, so I'm a futures trader. And I offer, a process that's, I think, a little different than what most people do, which ends up creating a different return stream than what most people provide. So therefore, that's really why my clients want me to manage money for them, is I offer them sort of zero to negatively correlated return stream to most of what they have in their portfolio.
So I want to go back to why you started trading. So how did that kind of come about? How did you come across trading in the first place? And how did you kind of begin trading then?
I think I was always sort of interested in the market like other people. I went to, I was an undergrad business student. So obviously you sort of gravitate towards the market a lot. Didn't know really what that meant. But when I was in college, I started reading, a lot of books, sort of the classic books that you would go through when you first start, Graham and Dodd, value investing, that type of thing, it made sense. Warren Buffett, hey, that makes sense to me, right? When I had my first real job, which was I was working for a commercial bank there, and I was like in their little executive development program. And it was really not for me. It was a little boring for me. It was more of a, lifelong career path type of thing, you know, follow and climb the ladder and all that. And that wasn't really for me. At the time, Hong Kong, we're looking at like 1991, 1992. Hong Kong market started to go into sort of this bull phase because everybody was piling in because of China was opening up and then this whole thing. And so it was just an exciting time to sort of get involved. So I started trading while I worked at the bank. I just opened up, you know, a personal account and got myself a broker and started trading Hang Seng Index futures and stuff. And it just kind of went from there.
Do you feel like the Hang Seng Index is similar to what we see in the US or in the biggest market, or is it a different game, a different thing to trade?
You know, it's all the same. I think it's all the same, you know, and I went through, I was 22 or whatever at the time, and it was a massive bull market. And I went through what I think most people go through, you know, which is that it was a massive bull market. And I made much more money than I should have given my knowledge base. And I think also what most people go through, I ended up going ahead and giving that back as soon as the bull market ended, right? So that's it's a good lesson for people to learn. You know, you have to make a choice at that point, right? Do I want to continue doing this, or do I want to just stop? And I think if you want to continue, then you really have to take the time to learn how to actually do this. You know, it's one of the worst things to happen to people to make money when they first start trading. It feels like the best thing to happen, obviously. But to me, it's actually one of the worst things to happen because obviously I went through the same exact thing. You know, I figure I'm 22 years old. Hey, look at the money I just made. Give me till I'm 30 and I'm George Soros, right? Which clearly didn't happen and is never the case, you know? So you learn as you go.
How did that period go? Did you know you wanted to go back in trading right away, or did you have to take time to kind of think about it a little bit, kind of consider a little bit more where you were going to go after, and then go back in the market? How did that turn out?
No, at that point I was all in. You know, I knew that that's what I wanted to do. And at that point I had left the bank I was working for and started working in the securities industry. So I wasn't going anywhere. That was what I wanted to do. And it took me a long time, truthfully. I mean, I had a job, so I was getting paid okay. But it took me a long time to really establish myself in the business of trading.
So how did you become then a profitable trader? Did you have to kind of meet people to learn how to trade, or did you do it all by yourself? How did that go?
You know, I started taking it a lot more seriously. I started observing the markets. I started writing a journal down, what kind of trades work, what kind of trades don't work, you know, reading, listening, researching, and experimenting, you know, and slowly sort of built a process that I thought worked. And even once I had the process, then I slowly had to develop the mindset to be disciplined to that process, right? And like I say, the easiest way to do that is to lose money. You know, lose money on trades where you're not disciplined, and slowly it chips into you. Like, why am I doing these trades where I'm not being disciplined if I'm losing money? You know,
It's definitely a tough period to go through, and it's something you got to do. Like, you got to be honest with yourself. You got to figure out what works, what doesn't work, then kind of cut that stuff that doesn't work. Sure. Now, how did you transition from trading on the Hang Seng to then trading on the US market?
well, I left Hong Kong. I went to business school for a year in London, and then I came out and was trying to figure out what to do. Now, I had made a bunch of money when I was in London trading the markets. So I didn't have to do anything. What I ended up doing was moving to Thailand and sitting there on the beach of Phuket and trading. And again, thinking I was the smartest guy in the world. Look at me, you know, everybody's working and I'm sitting here with my toes in the Andaman Sea, and, you know, I'm trading from my house and I'm the smartest guy in the world. And that took about 8 months before I blew all that money out. So from there, I really kind of had to make a decision, because at this point I was now out of money and I was married and my wife was pregnant, and I really had to figure out what the hell, you know, if I really wanted to do this right. That's what I did. I went through all my notes and I went through all the things I've learned. And this is really when I started to develop the process. And then I just slowly kind of got back into it. You know, I went, you know, back to the States and got a job working at a prop shop that was paying me, I don't know, it's like $40,000 a year in salary or whatever, and then a piece of what I made. And, you know, $40,000 a year is certainly not a lot of money when you're sitting with a wife and a baby, you know, and slowly worked my way and slowly sort of started to make money and slowly started to develop a reputation and slowly met people and just kind of, eventually got a job at a nice hedge fund and did well there and built a reputation. It took a long time.
So that's one of the big misconceptions I see with like new traders and people getting in the market like that are pretty new to it. Is you think that once you make it, you make it forever and you'll be successful like forever after. But there's like plenty of times where you kind of fell back a little bit. You had to work on some things more to then go back on track. So I think that's something that people don't really get from the start, but they definitely have to learn that over time.
I think that this is one of the hardest things to do in the world. And if you think that you're just going to have success right off the bat and that it's just going to continue that way, then you're going to learn the lesson that you have to learn, and do you really want to do this? That's when it will test you, if you really want to do it. There were situations where, I was like 30 something years old and I didn't have $1,000 in my bank account and I could have gotten jobs. I had friends that had worked for, at this point, the big brokerage houses. And I could have gone and gotten a job as a salesman or whatever, working there. And I didn't do it because I wanted to trade, I just kept pushing. I kept trying to meet people. And eventually I met some good people that helped me and believed in me. And slowly we built it up. But yeah, it's just like anything else, right? You have to really want to do it. With this, you have to really, really want to do it because this is, to this day, this is the hardest thing that you can do.
What do you think kept you going in trading? Was it the passion of reading the market? Was it like seeing how you could improve yourself in trading, or what was the motivating part in the trading aspect that kept you going?
I love the idea that if you could actually make this happen, that you really didn't have to theoretically get a job, so to speak. You know what I mean? Sit at a desk all day and collect your salary and all that, because I was horrible. I'm a horrible worker and I'm a horrible employee. You know what I mean? So bosses don't like me and I don't listen to what people say. And, I was always getting fired. And, so that was, my life was never going to work that way unless I kind of stopped being me and just sucked it up so that I could get salary. And I didn't, quite frankly, want to do that, So I liked that aspect of trading. I had this dream going way back that I could work out of my house, not have to commute, not have to work for anybody else, and just manage money and trade for a living. And that was my dream at 20 or 23 years old. I'm now 55, or I will be in a few days. And now I do that, and that's all great. But I mean, you're talking about a 30-year journey of hell, to get there, right? But that was kind of what I liked about it. Plus, I felt like I understood the necessary psychology to what it took to trade. It kind of made sense to me, very contrarian. You have to be very contrarian and all that type of stuff. And I've always been that way. So that kind of psychology made sense to me. And I also like the fact that there's no arguing in this stuff, right? I would say, like, you can go to a party. I'm the guy at the party when everybody is talking about, let's say, a movie, right? And how great it was. I'm the guy sitting there saying it sucked, right? And you can't win that argument. If you have, 50 people saying that the movie's great and you're the only guy saying that it sucked, then you're the loser, right? Whereas in the market, it's not like that. Everyone in the world can be saying the market's going down and you can say it's going up, and there's no argument. Either it goes down or if it goes up. You can argue all you want, right? But it's not about winning the argument. It's about, did you get it right and make money, right? So that really kind of appealed to me. And I needed that based on my personality and all that. I need to be in a place like that. I'm not going to win any popularity contest. So, and the good thing is that's what works in the market. You want to be popular in the market, you're not going to make money. So
I think that's good advice. And I think a lot of traders are focusing too much on like copying what other people are doing. They want to follow like what the other guys who are profitable are doing, and instead of like being on their own and doing their own thing. And I think that's kind of a mistake sometimes.
Yeah, I mean, it's human nature. People want part of a group, you know what I mean? And all that. And for whatever reason that my mom or my psychiatrist could get into deeper than I could. I've never felt comfortable there. You know, I've never felt comfortable with the group. You know, I'm talking about not just trading. I'm talking about since I was a young kid, you know. I never felt comfortable in the group. I never understood. And to this day, I kind of understand it now because I've read a lot about it, but I just don't get why you would want to be identifying with a group. Wouldn't you rather just identify as an individual? So that's a whole nother deep conversation, but fortunately it plays out well in trading. So that's one of the main reasons I'm here.
I was told that you almost retired from trading, but you went back in the market around COVID. Why was that? Why did you get back to trading like so intensively?
So at one point I was managing a pretty large firm and I had a bunch of people working for me. I left this hedge fund and did that because the opportunity was there. People were offering me a lot of money to leave and start my own thing. And that was sort of the big dream, so to speak. And I found that that was not the big dream because I spent a hell of a lot more time managing people than I did managing money. And that wasn't what I wanted to do. And then I got divorced and I just kind of backed off and was like, I need to maybe rethink about what I'm doing. You know, at the time I was, I don't know, 40 something, entering my 40s, maybe mid 40s, somewhere around there. And I just kind of backed off and was like, I need to take a little bit of time off and sort of get my head back on straight and figure out what's going on. So I did that. I kind of moved to a farm and all that for about a year and a half, you know, chopped wood and did all that kind of stuff and went all thorough, as they say. And then I came to the conclusion that I really wanted to get back into it because I missed it. You know, I was having a good time and I had met a new woman who I was in love with and I was having a great life, but there was like this hole somewhere in there. You know, I felt like at the time, like I was going through like a midlife crisis or something. I was like 45. I'm like, this must be midlife crisis. Like I can't put my finger on what's going on inside of me that's missing. And truthfully, it came down to I love to trade the markets. And so I went and started trading again. And that was about, I don't know, 6 years ago or something like that, 6, 7 years ago.
Easy to go back in the market straight away, or some people might see you kind of lose your touch over time. You got to like learn again some parts. Did you go back like so easily, or did you have a time where you had to kind of relearn some things about the market?
No, I just started doing, I was always following it anyway, you know, but no, I just went back. And actually, I tell you, since I've come back, the last 6 years have been the best 6 years of returns, in particular return to risk, that I've ever had. And I think it's because of that year and a half that I took off and kind of cleared my mind. You know, I hadn't taken off a day in the market in 25 years, right? So I think clearing my mind really helped in that, especially on the discipline side, you know. Yeah, since I've come back, it's been really my best run. So knock wood, hopefully that continues.
You're trading manually, or is it running systems that kind of trade automatically?
No, I trade manually. I mean, I run a process that is theoretically semi-systematic. I put it this way, I can't make any trades, or I don't make any trades that my system says not to make, but I will sometimes not take trades that the system says to make. So it's like a system, but it's got discretion over it. But it doesn't like automatically fill or anything like that. I look at it, oh, this thing's saying buy this or sell this, and you know, I go on the machine and I just, you know, buy or sell it.
I think it could be helpful if you explain for some people about the difference between like a trade setup and a trading system. Like, what's the difference between both? Is it the same, or are there some differences?
Well, my system is theoretically supposed to catch what it is that I'm doing, right? So it will systematically tell me, hey, this thing's a buy. But what I've learned, at least I like to think I've learned, is that there are some weaknesses within my system. And I kind of feel like maybe I know what some of those weaknesses are. So therefore, when the system might say buy this thing, I might be like, well, this is falling victim to one of these weaknesses that I'm seeing here. So I'm not going to take these trades. And sometimes I wish that I did. Sometimes I'm glad that I didn't. And that's because a lot of times things are random anyway, you know what I mean? So, you know, things go up and down. It doesn't necessarily mean you made the right or wrong choice, right? It's about making the right choice, which is a risk reward thing, right? It doesn't necessarily always give you a positive outcome, and making the wrong choice doesn't always give you a negative outcome, right? But over time, making the right choice from a risk reward basis will give you a positive outcome over time.
People are going to want to know for sure about your trading style. Like, what are some things you look at in the market? Is it like always one specific thing, or does it vary based on the market? What's kind of like your trading style overall?
I trade one process. across all different, as many markets as I can. So I'm a futures trader. I trade all the US futures markets that have liquidity. So there's about 37 markets that I trade across. And I trade one process across all those markets. So I look at it kind of like I'm counting cards on 37 different tables, you know, and when the one table is showing a high card count, then that's where I'm going to make my bets, right? So it's one process. And really what I'm trying to do at the core of it, there's a little bit more to it than this, but at the core of it, I'm basically trying to be long what everybody is short, and I'm trying to be short what everybody is long. I'm trying to make a market to the crowd. If they all want to be short, then I'll be long. And if they all want to be long, I'll be short. Because if you really think about it, the crowd loses money over time. So I'm not trying to be the smartest guy out there, because first of all, I'm not. And second of all, I don't think it exists. And third of all, even if it did exist, I don't think it would help you make money in the market. But I'm just trying to find the people that lose money and make the money that they're losing over time. It's really all I'm trying to do. To me, it's very, very simple. Why make it more difficult than it has to be?
So is it more like a reversal trading? You're looking to catch a big reversal, or it's more like just looking to go against the crowd and some small moves in the market?
Most of the time, I would say as high as 98% of the time, I am picking market turns. Yeah, I'm picking bottoms and tops because that's when the most pronounced participation is going on by the crowds. You know, they're panicking at the lows and they're freaking out at the tops.
Interesting. Now, you're one of the rare traders I see doing this. That's quite interesting to hear. And you do this intraday, or you do this like on a higher time frame?
No, it's on a longer, much longer time frame. I'm picking sort of major market turns. Usually these trades last 3 to 6 months.
Wow, yeah.
I have had I have had trades last a lot longer than that. I've had trades last almost up to 2 years, but it's not really up to me. It's up to them. Like if they're all short and I buy and it starts going my way, it's going up now, I won't get out until they start getting out of those shorts. So it's up to them. You know, usually it takes them about 3-4 months. But if they're going to sit short for 2 years, then I'm going to sit long for 2 years, you know.
Interesting. So you're going to look at the market to decide when to exit. It's not based on like a fixed target at some point. It's based on really when the market starts to go against you, then you'll get up.
This is all, again, up to them. It's not up to me. You know, if I'm buying because they're all short, then I'm getting out when they get out of those shorts. That's the process that I'm using, and that's the edge that I'm trying to get. So that's what I use to get both in and out.
Now, I'll be curious to know, like, what's your daily routine to be able to manage that? Because you look at multiple markets, that's probably a lot of work. At the same time, it's on a higher time frame scale. So how much time is trading involved in a day-to-day? What do you spend time on? What's the most important thing you do daily? And kind of how that all plays out?
I mean, first of all, I have data, right? The downloads. So, and that goes into my system. So my system tells me like what markets are showing what I'm looking for, right? So this is what it could be. I'll give you what it could be, and I'll give you what it actually is, okay? So what it could be is, okay, so here's the markets that have possible trades. So I have to start focusing on those markets, right? What's driving that, right? Here, I want to get whatever, short wheat. Why do I want to get short wheat? Well, because everybody's long. Okay, well, why are they all long? What's driving it, right? Well, because whatever, there's a war going on between Russia and Ukraine, and therefore people are expecting that Ukraine's not going to be export wheat, and there's a huge heat wave going on, and therefore, you know, everybody thinks that the wheat harvest is going to be lower than expected because it's all burning out and all that. So I start to follow those markets where there's possible trades very closely, and what's the news that's driving it, right? And that doesn't really take very long, quite frankly, but that's kind of what I'm following. And that's really all you have to do, right? Because now I'm looking for them. I mean, my trades trigger on what I call a news failure. So again, if everyone's buying wheat for these reasons, and some news comes out that supports these reasons, and the wheat doesn't go up anymore, now the tape is sort of telling me, this is tape reading, right? The tape is telling me, okay, there's no one left to buy. So that's where I'm going to short it. And that all takes no time right there. What it really looks like is I sit in front of these screens all day and night. And I watch them all day and night, you know. Now, part of that is because I do use discretion on my stuff. And the biggest discretion really is on the portfolio side, right? If I have this trade on, this trade on, this trade on, this trade on, like let's say I get signals to be long Dow, S&P, NASDAQ, and Russell. Well, clearly those are all correlated, and that's the same trade 4 different times, right? So I'm not going to put all those on full size. But when it comes to cross assets, right? Let's say I'm long S&P and long gold and long silver and cotton and a whole bunch of stuff like that. I want to know sort of what those correlations are. Now, clearly you can do that by running a value at risk or something like that, but I don't do it that way because I find that that's too delayed. So I'm watching these correlations day by day and sort of following sort of what the psychology is behind those correlations, is because these are all driven, like right now, for example, are these all driven because of inflation expectations, which is the big talk here, you know, and therefore, how am I going to size my different things across my portfolio based on those correlations? So I watch kind of all day and night for that matter. I mean, literally, I'm up usually around 7:30 because that's when my wife gets up to make her coffee. And then I am here in front of this all day. I have the TV on because I like to listen to what people are talking about, because I like to build a general psychology, you know. People say, oh, you're crazy. The people on TV don't know what they're talking about. And my answer is always, that's exactly why I listen to them. You know, the people that do know what they're talking about are not talking to me, right? If I could get George Soros or Stanley Druckenmiller to tell me every trade he's going to make, well, then my life would be easy, but I can't. So I have to listen to the people who are going to be wrong over time and go opposite, right? So, you know, I have the TV on the background. I like to listen to what these people are saying. At the end of the day, I love to watch the post-market shows. It's one of my favorite things that there is. And again, people are like, those guys are idiots. Why would you listen to them? I'm like, that's precisely why I listen to them. Okay. So I watch the post-market shows, and then I go to sleep for about 2.5 hours or so, 3 hours. And then the Asian markets open, and I sit here and I watch that until about, 2 o'clock in the morning, and then I'll sleep again from 2 to 7. So I get my 7-8 hours of sleep. I just do it in 2 different phases. It's a horrible, horrible way to live, but it doesn't need to be done that way. And truthfully, I don't just sit here. A couple of years ago, for example, I said to myself, I sit here in front of these things 18 hours a day, right? Instead of just sitting at this desk getting, fat and out of shape, I could sit here and do push-ups the entire time. I could do 1,000 push-ups a day and be like the most in shape guy in the world, right? Which I'm not going to do because I'm not really into that kind of stuff, but I am into music. So I was always a drummer. I can't sit here and play drums and watch the screen, but what I can do is I had a guitar. My son had a guitar. I started playing guitar. I can sit here and play guitar in front of the screen, all day. So it kind of does both, right? And then a cool thing happened after the book came out, where a lot of people were hitting me up after that book came out on LinkedIn and places like this. Hey, can you help me learn how to trade? Can you mentor me? And you get to a point in life in your 50s, I think, where you do want to kind of help people. People have helped you, and therefore you owe it to sort of help other people. And you also start to change your view on life, that really giving back is the key. That's a whole nother philosophical conversation. But because all these people were helping me out, we're hitting me up, and I can't help 300 people at the same time, right? So one of them ended up starting this web page that people get on, and we have a Discord chat. So I spent a lot of the day on the Discord chat, speaking to them about markets and speaking to them about trading, and we speak about other things too. We joke around when the markets are slow and we have fun, but that's become another place to kind of spend my time. So like that's on my computer while I'm watching the markets, but it's also giving me sort of something else to do while it's all going on.
I love that. That's a crazy routine, but I totally understand when you have a passion for the market. Like that's really what you really want to do. Then that makes sense to do it. So
it's a crazy life, and it's a crazy routine. Yes, I've sat in front of these screens. Sometimes I see things and people are like, "Man, how did you see that?" I go, because I've been watching these things 18 hours a day for 30 years. You know what I mean? Sometimes you pick things up.
Also, when you think about it, like the average trader watching the charts maybe like 2 hours a day, 3 hours a day. Like so even for myself, I don't watch a chart that often, that long, but I watch them a couple of times a day for sure. But there's probably things to pick up by watching the charts a lot, by going through the price action, the data on the chart. Like there are probably some commonalities and things you pick up that you wouldn't pick up if you just look at the chart like an hour a day or something.
I would think so. Although probably doing an hour a day probably makes it a lot better, but your return on time is probably a lot better if you can make money doing it that way. I always talk about this trade that I made when I was in that book, but I got long because I was looking at the charts, and I got long the Hang Seng Index, and I thought that I thought it was going to go up, for a number of different reasons. I thought it was going to go up. So I bought a bunch. And then I went away to Africa for 4 weeks. And this was cell phones kind of and pre-internet really. So there was nothing I can do. I told my broker, look, if it goes down here, then stop me out. Otherwise, I'll call you in a month, right? So I didn't look at a chart for a month. I didn't even know what was going on in the world for a month. And I came back and lo and behold, the market had gone up a whole bunch and I made a whole bunch of money. I didn't look at the chart once, right? So it's probably the better way to do it. This is just, I don't know, it's habit, this is old habit. And like I say, it's important for me to be because of the correlation in the portfolio and whatnot. I really need to pay attention to that.
Yeah, you used to have a big job when you manage a fund to be able to make sure the risk is not too high on some things and that you don't like overexpose yourself for sure. So do you feel like the big events we have these days, like the war in Ukraine, the COVID thing that happened before, do you feel like those add more risk to your portfolio or do they kind of not really add any risk to it?
I think there's always something. You know what I mean? There's always something. You know what I mean? Okay, we haven't had a war in Ukraine before, but I don't know, since I was born, I've been hearing about the Middle East and how it was going to blow up the world. And then we had North Korea was going to blow up the world. And, the whole Russian American thing before that, the Cold War thing, now it's inflation, before it was deflation, recession. It's always something, it's always something. So I don't really think that changes. I mean, sure, volatility picks up on the day of, Russia invading Ukraine or whatever. But I feel like there's always something going on. So I guess the short answer is no, I don't think it changes.
Now, I don't want to talk about the Market Wizard book that you were featured in, and being featured in one of the Market Wizards is like a big thing. So all the guys watching the interviews are going to know what Market Wizards is for sure. They've all read it for sure. So tell me what was that like to be approached to be in the Market Wizards book? How did that go and how did you kind of feel about it?
It's funny because the first book that I ever read about trading, and I read it the first day that I put on a trade on the Hang Seng Index. I had no idea what I was doing. I went to the bookstore and there was a book that looked kind of cool. I bought it. I read it that night. I thought it was the coolest thing in the world, and it really set me down my path of trading. Right. So when you're like that and you're 22, your dream is to be a market wizard. Hey, I want to be in market wizards, right? But when he approached me, I really didn't want to be anymore, and I told him that. More to the point that I'm not looking to raise money. You know what I mean? I manage all the money that I want to manage. I have the clients that I want to have. So I didn't need to do it from a marketing perspective or anything like that. I also sort of have that superstitious feeling that once you subject yourself to that kind of press, then you're digging your own grave. I don't know if you ever read Victor Niederhoffer's first book, but I thought that one of the messages that Victor Niederhoffer was giving in his first book is that if you write a book, you're about to blow out, right? And he did write a book and he did blow out, right? So he proved his own point, right? And so it's not really important to me to get fame or to get notoriety. I don't care if anybody knows me. All I want to do is make money in the markets. That's what I want to do, right? So I was kind of against it, and I talked to Jack about that, and he just kind of kept coming back to me, and he was like, "Well, I mean, Bruce Cumner was in my book, and I didn't do any bad things for him, Paul Tudor Jones was in my book, it didn't do anything bad for him, so So, and then I talked to some friends, and they were like, just go for it. Stop being such a wimp." So I did. So I agreed to do it. And look, it ended up, I tell you what, first of all, my P&L did top for about 5 months the day the book came out. So I was right about that. Hooray for me. Right, and lost money. But it turned out it ended up doing some good things. This whole webpage thing and all that has been really enjoyable. And that really came a lot from that. I don't think anybody would be interested in getting on my webpage if I wasn't in Market Wizard. That's where most of the people came from. They read the book, they liked what I was talking about, they searched for me, they see my webpage, they go on there. So yeah, that's a good thing that's come out of it. So it's fun. I guess it's fun.
Yeah, and it's definitely a big thing because like there's not 1,000 Market Wizards anyway. There's only a few of them, and you're part of them too now. So that's amazing. And also it shows credibility because like all your track record, I'm sure you had to submit them to Jack, and then they had to check this out and make sure that you are redoing what you were doing in the past. So that's definitely a big thing. So I mean that's a big accomplishment for you, of course.
Yeah, thanks. Yeah, I mean it was nice. Jack's a good guy, and those books were always my favorite. So the first 3 Market Wizards books I think are phenomenal. They're all good, but the first 3 for me were phenomenal. Really helped me to sort of really believe that this could be done and think about how to do it.
So what would you tell people who want to succeed in trading but can't seem to get profitable, or they keep blowing up account? Like, what do they have to focus on to get off on the right side and start to make some profits in the market?
Process, discipline, and honesty. You have to, and not thinking that it's just an easy thing to do. You have to understand 98% of the people or some number like that lose money doing this. So how are you going to become that 2%, right? And I know everyone thinks, oh, because I'm the smartest guy there is. Well, A, you're not. And B, even if you were, that's not enough. You really have to think about how you're going to get an edge. And once you get that edge, how you're going to be disciplined enough to take advantage of that edge. That's really the game. You're not going to get in there and get on a bunch of whatever Reddit pages and everyone's saying buy this, and so you're going to buy it. You know what I mean? You're not going to get in there and start trading Fibonacci numbers, you know what I mean, and all this and make money. It's not going to happen. A million people have tried it and a million people have failed, so you have to be very honest about the whole thing, and you have to be dedicated to it. You're not going to do this on a whim and just make money in a bull market, sure, but it's not always a bull market, and I don't think it's going to be a runaway bull market for a very long time anymore. So those days are gone. So if you really want to be a trader and you really want to make money, then, read the Market Wizards, read all of them. Read as much as you can. There's all kinds of great books out there. You know what I mean? I went off reading trading books because I felt like I read all the ones and all the lessons from trading books I had already read. But, I read books on human psychology, which is really all trading is, right? I have a book right here that I just bought here called Thinking in Bets by Annie Duke, who's a famous poker player. And, she talks a lot about, it's all just risk reward. There's really no difference between poker and trading, right? So it's got to be a thought process, and you have to be very disciplined, and you have to be very dedicated to do this, because it's very, very hard. What I always tell people is go to law school, because then you're not going to get stuck into this life of trading. You know what I mean? Go to law school, make a good living as a lawyer. And if you feel like trading, okay, take some of that extra income that you're making as a lawyer and trade the markets a little bit on the side. That's my best piece of advice. But if you're really dedicated to being a trader, then just be prepared for a very long journey.
I love that. Well, getting back to the book, the cool thing about the Market Wizard, especially, is the fact that you're not going to learn strategies, but the strategies are, I think, overrated. So there's a lot more you can do, but you're going to learn like the traders of traders, the things that are common, actually the things that are not common between traders, because they all have their own style, they all do their own thing. And that's the thing you learn the most in the books. And like the psychology behind it, what happens when you have a big loss, what happens when you blow up a big account, what happens when this and that. I think that's really valuable advice for people to learn. It's definitely good advice there.
Those are the more important things. Like, and I tell people that all the time, like even the people that are joining my webpage and all that, okay, I'm going through sort of the trades that I'm doing and my process and all that. But truthfully, that's not necessarily going to work for you. You have to trade you. I have to trade me. I can hand you my system. And if you don't have the type of mind and the type of psychology that fits into that process, then it's not going to work, right? Because you're not going to stay disciplined to it, and you're going to mess the whole thing up, right? You have to trade you, but the lessons across, no matter what you're doing, are the important things, right? People are like, oh, well, you don't really talk about crypto, and I'm a crypto trader. I'm like, it doesn't matter what I talk about, man, because what I'm talking about, no matter what you're trading, you're going to need to have these disciplines, right? You're going to go through losing periods, and you're going to need to deal with that. You're going to go through winning periods, hopefully, and you're going to need to deal with that. But you're going to need to think consistently about process, edge, discipline, and all that. And that's really the stuff that I try to push on people. Not hell, trade like me because, blah, blah, blah. I tell people don't trade like me, right? Trade like you, but use these lessons across it. So I think you're 100% right about that, yes.
And since you mentioned Fibonacci, do you feel like some of these like common trading tools are kind of overrated, like Fibonacci, some of the tools that you can see everywhere on like the websites and the videos? Do you feel like you have to go beyond that to really make something your own, or that you can just use these tools and be successful?
I would answer on both sides of that, truthfully. Do I think they're overrated? Yes, I think they're 100% overrated. Do I think you can go on a website and listen to some guy talk about Fibonacci numbers and make money? No, I don't think that you can do that, right? But at the same time, I think with good discipline and good risk management, you can make money a million different ways. You know what I mean? Flip a coin. It's 50-50, right? With good risk management, you could probably make money out of that, right? when I first started trading, I sat next to this woman, Jackie Chan, who was a great trader, and she used to do that. She used to buy something and be like, here, I just bought this, deal with it. See if you can make money out of it. And then she'd turn to me and be like, here, I just shorted this, deal with it, see if you can make money out of it, right? It really, people don't believe it, but the direction of which way you're going in a market is almost the least important thing of what you're doing, right? The discipline and the risk management is much more important than that. So if you're trading because of Fibonacci, or you're trading because of Elliott Wave, or you're trading because Jason Shapiro said buy, or you're trading because some other guy said sell, you know, that's the least important of it all, you know. Same two people put on the same trade, one makes money, one loses money. The difference is discipline and risk management. So I guess, I don't know if that answers your questions, but I guess the answer is yes and no.
That's such a good advice. No, this answers it for sure. Now, I'm just curious, how do you get out of a trade while making money, like a random trade? How can you get out of that trade and still make money? Is there any techniques or things you look at?
Yeah, I mean, like I say, I buy because everybody's short. So I get out when everybody's not short anymore. That's really all I do, right? And that's my process. And that's what I stick to. And that's what I have found has worked for me, right? It fits into the type of person I am, fits into the psychology I have. And over time, it has, knock wood, you know, made me money. So I stick to it for that reason more than anything, right? And I've tried to eliminate. I think that I've gone through all those things that you're talking about, you know, trading Fibonacci, trading this, trading that, trading the other thing, right? I've gone through almost all of them. I must have read 500 books on trading in my day, right? And I slowly eliminated the ones that didn't work. If you could just eliminate the things that don't work, then you're stuck hopefully with the things that do work, right? And after 30 years, you know, hopefully I'm getting closer to that place.
So many good tips and advice in this interview, so I'm sure people are going to love it for sure. That's definitely awesome. I want to thank your time, so I'll make sure to link the webpage you mentioned in the link to the video, the description there. People can check it out, see what you're doing there, and connect with you, of course. Where else can they connect with you if they want to reach out or see what you're doing in trading?
So I'm on, you know, we have this webpage. We're crowded. After my partner always gets mad at me, crowdedmarketreport.com, which costs a little bit of money to go on there, no, not very much. But then we also have, I also make YouTube videos, which is under Crowded Market Report, and those are clearly free because it's YouTube. So you can go on if you don't feel like paying whatever the $100 to join our thing. You can go on the YouTube. There's not as much content there. But I do make a weekly video and I talk about things like risk management and things like, you know, like that on there quite a bit. So you can go on there too and let me know what you think. And I ask people, if there's anything that you wanted to see a video about, write it in the comments, let me know, and I'll try to do one about that if I know about it. Like, I'm not going to do a video on Fibonacci's, and I'm not going to do a video on, you know, on something like that. There's plenty of people doing that. You don't need me to do that, you know, so. Plenty of people that spend a lot more time looking at that stuff than I do, so people don't need me to do that. But yeah, those are places that people can check it out and see if they like it.
Awesome. I'll make sure I'll leave them link to the video here on the podcast show notes also. People can just click those and find the websites directly and your YouTube channel also. So it's gonna be easier to find there. This is really good advice. I'm really happy for this. I think people will benefit a lot from this interview. And definitely reach out to Jason if you have any questions, of course, after the interview, or comment below the video for your questions. And Jason, I appreciate your time and the advice you gave here.
All righty. Does anybody have any questions? So what I think that we need to understand is if you don't have a process, then it's going to be hard for you to create consistent profits repeatedly, right? We can all get lucky once or twice and generate wins. But if you don't have a process, one that's proven to generate profits, the way you prove it is through back testing or forward testing or whatever. That means getting a demo account and go through your processes over and over again and generate a profit consistently. If you don't have that, then it's going to be very hard for you to find success. So, you know, I think coming out of these videos, some important questions that you need to ask yourself is, do you have a process that's proven to generate profits? And if you do, if the answer to that question is yes, then are you going through the necessary steps of that process to give you repeated success over and over again? And if you aren't, why aren't you? Right? What are you doing about that? How do you change those behaviors in a way that it will allow you to generate profits or go through those processes successfully week after week, day after day, trade after trade? Are you over trading? Are you revenge trading? All of that stuff, all of those questions you need to be able to answer. Okay. And if you can't answer those questions, then you probably don't need to be trading. And that's just the short of it. But, you know, please ask yourself these questions. If you saw the market drop Friday and you didn't enter that trade, or you weren't confident to get in for the sale of the US 30, why weren't you? Weren't we anticipating a drop, you know, in the US 30 based on the interest rates raising? Like, are you keeping up with the current events? Do you understand the fundamentals that are moving the market? Like, we talk about them every week, but do you understand them? If you don't, what are you doing about it? Why don't you understand it? YouTube is a great resource. You can be a PhD student and just take YouTube courses if you know what you're looking for. And trading, we all had a syllabus. If you don't have a syllabus for trading, download the Japanese candlestick app, and it'll give you a syllabus. You can research every topic individually, and it'll give you a syllabus breakdown of what you need to know to become a trader. And you can study those subjects, and you'll be a pretty darn good technical expert, you know, when it comes to trading. If you want to understand the fundamentals, then start looking at the economics courses. You know, economics is what drives the market. There are different cycles in the economics. There are different economic cycles. Recession is one of them, you know. So if you don't understand what moves the economy, then maybe you just need to do a little bit more research. It's out there, it's available, and you have a team of people. You know, there are a crap load of people in the Discord who might want to take the journey with you. You guys have any questions?
No questions.
Oh, that's great. All right, I'm going to go ahead and stop the recording. And what we would